Things aren't looking good in Beijing. China's economic value is worth approximately $19 trillion. Of this, the shadow banking industry is worth close to $3 trillion. The shadow banking industry has posed a major threat to China's stability for years. The rapid growth of shadow banking in China has contributed to a credit bubble, excessive lending through shadow channels. This has fueled unsustainable levels of debt in various sectors, including real estate and local government financing platforms. Now, the shadow banking sector has collapsed. What does this mean for China? And what does this mean for the world economy? Defaulter, shadow banking, and anxious investors. The term shadow banking refers to a system of shadow lenders that also includes trust firms. These lenders operate outside of the traditional banking system. Contrary to the name, shadow banking doesn't exist in the shadows. It's best described as an open secret. Beijing has tried to maintain some control over the shadow banking sector. It's rarely enough. The truth is different. The government actually benefits from the existence of shadow banking. At least, it used to. Shadow lenders would ease the movement of funds. They'd move funds from investors to infrastructure. As the world's second largest economy, China relied mostly on the real estate and property sector. Government-backed banks offer low interest rates on bank deposits, so shadow lenders lure investors with the promise of better returns. These returns are often between 6 to 8%. So, while shadow banking might be unconventional, it's helped fuel several parts of China's economy. Shadow banking exists all over the world. In China, they enjoy a certain level of freedom. The fact that investors were always assured of something, their returns helped turn the sector into the multi-trillion-dollar one it is today. They were seen as safe investment vehicles. So, what changed? Everything. While the rest of the world faces inflation, China faces deflation. But this is not a cause to celebrate. It basically means that the Chinese people do not have enough money anymore. Not enough to spend on necessities. Businesses are shutting down. Companies are closing up for good. Youth unemployment is skyrocketing. So much so, actually, the Chinese government refused to release youth unemployment data in 2023. This was a major blow to the rest of the world. China has always enjoyed a stable position in the world economy. The average GDP rate was proposed to increase at a steady rate of 5% every year. It did so for a long time. Beijing believed they'd soon reach double digits. Now, it looks like they're headed toward a decline. The fact of the matter is that the Chinese people do not have enough money to spend anymore. The economy is driven by a constant cycle of buy and spend. In the real estate sector, this would translate to homes being bought, preferably being bought with a significant markup. However, since the population can barely afford to get by any longer, homes are being sold for cheap. Circling back, China relies on the real estate sector. In turn, the shadow banking sector also relies on the real estate sector. However, several real estate companies are now declaring bankruptcy. They declared overambitious goals and failed to see them through. Take Evergrande as an example. The company filed for Chapter 15 bankruptcy to save itself from being sued. The company had undertaken a massive development project. In the middle, however, they announced that they didn't have the funds to support the project anymore. It all starts with one defaulted payment. They pile on, accumulating interest, and the company eventually declares bankruptcy. The world economy is in crisis. Economies have historically collapsed all over the world. What's so different about China? Arguably, everything. Trusts are falling behind on their investor payments. Some are on the brink of defaulting as more and more companies declare bankruptcy. In August of 2023, Beijing employed CITIC Trust Company, which is a subsidiary of China Construction Bank. The organization worked with the government in 2021 to come up with a bailout package. That was when the state of affairs of the Chinese economy wasn't as bleak as they are today. This time, CITIC Trust Company was tasked with sorting through Zhongrong's affairs. Zhongrong is one of China's largest trusts with $87 billion worth of funds. These funds come in the form of wealthy individuals and corporate clients. In August of 2023, they started missing payments. Experts believe Zhongrong is just one of the few trusts that we actually know about. Beijing has always been secretive about its affairs, even from the country's own economists. This has caused concern for people all over the globe. They believe that China is covering up the truly abysmal state of its economy. Economists realistically estimated where a portion of Zhongrong's $87 million came from. investors outside of China. This is plausible since shadow banking is a worldwide phenomenon. So now, Western organizations that have loaned money to China's shadow banking sector are now in crisis mode. Investors are now seeking their money elsewhere. They're looking at Beijing to offer a bailout package before these trusts declare bankruptcy. Police protection of Zhongrong's offices was increased. Investors and anyone with a stake in China's economy gathered outside the building in 2023. This was to encourage Beijing to step up. Another problem with China's over-reliance on shadow banking is that they're now clueless, since the sector alleviated the financial burden off of them, so they allowed it to continue unchecked. Now they have to start from the ground up if they truly want to understand where the money has gone. Additionally, they'll have to ensure that money is returned to the aggrieved parties. Economists fear that Beijing isn't stepping up as it should. Many argue that it was a lack of intervention in the first place that allowed things to escalate this far. When did things go downhill? As with many of the world's problems in 2023, trusts were at risk of defaulting on their loans soon after the pandemic. The pandemic offered a grace period for sectors all across the country. However, the true effects of a worldwide shutdown were only realized later, after the restrictions were lifted. That was when people realized they didn't have the means to survive anymore. Ancient Trust was the first Chinese shadow lender to look to Beijing for help. This was in 2020 when they declared they had a financial deficit of approximately $50 billion. Trust companies operate by borrowing funds from wealthy investors, then lend with interest rates to companies often in higher risk industries. They usually struggle to get conventional bank loans. China Banking and Insurance Regulatory Commission, the CBIRC, stepped in June 2020. Their job was to prevent several trust companies from conducting loan-like trust plans. Some lenders were told to cease operations immediately. Others were required to reduce the volume of their business by at least 20%. In hindsight, the CBIRC predicted a collapse. They knew that China's economy was about to face a major hit once restrictions were eased. They implemented steps to reduce the risk of trust companies defaulting. And if they did, the sectors that relied on shadow banking, such as the property sector, would cease operations. However, despite their efforts, the shadow banking sector was too large to stop. Again, the sector has a $3 trillion worth in China, compared to China's overall economy, which is worth $19 trillion. Another problem? Financial institutions actively sought out shadow lenders during the pandemic. They were eager to find ways around the restrictions. Shadow lenders provided financial services to several near-bankrupt businesses during the pandemic. In a way, Beijing facilitated this. Not only were they lenient with shadow lenders for far too long, but the other problem was that state banks only offered funding to state-owned enterprises. Figures from the CBIRC released in December 2020 estimated the size of the shadow banking space in 2019 to have been the equivalent of 86% of GDP and 29% of China's total banking assets. The role of shadow banking in China's current economic woes is similar to the 2008 financial crisis of the West. That was when non-bank institutions in the United States were a major source of lending, particularly in the real estate sector. You might remember this was the housing collapse of 2008. So how is China related to the world economy? China's economy is intricately intertwined with the global economy in a multitude of ways, impacting both developed and emerging markets worldwide. As the world's second largest economy, China plays a central role in global trade, finance, and investment. Firstly, China is a major exporter of goods and a critical node in global supply chains. It manufactures a vast array of products from consumer electronics to industrial machinery, which are sold internationally. This makes China's economic performance vital for countries and companies around the world, as disruptions in Chinese production can ripple through global industries. China is a major consumer of commodities such as oil, metals, and agricultural products. Its consumption patterns significantly influence global commodity prices, affecting resource-rich nations' economies, and the profitability of multinational corporations involved in commodity production and trade. Additionally, China's financial system is increasingly integrated with global markets. Its currency is becoming more internationalized. Chinese banks are expanding their presence abroad. This links China's monetary policy decisions and financial stability with global markets. Moreover, China's investments overseas often facilitated through initiatives like the Belt and Road Initiative. These impact infrastructure development and economic growth in partner countries, further cementing its role in the global economy. If China's economy collapses, the consequences for the rest of the world will be significant and far-reaching. China is deeply integrated into the global economy as a major trading partner, investor, and consumer of commodities. As a major consumer of commodities like oil, metals, and agricultural products, China's reduced demand would cause sharp declines in global commodity prices, affecting resource-dependent economies. Global financial markets would likely suffer as uncertainty and panic spread. International banks and investors with exposure to China could face significant losses. Economic turmoil in China could lead to political and social instability, potentially affecting its neighbors and regions with strong economic ties. Things seem grim at the moment. However, this wouldn't be the first time that Beijing has had to clean up after the shadow banking industry. Economists are hoping that the government will impose stronger restrictions on shadow lenders. In this way, they'll be escaping the massive credit bubble created by the shadow banking industry. All in all, though, economists are concerned that Beijing's approach is far from being ideal. The government refuses to release information that would allow the world to realize the gravity of the situation. Instead, they're adamant that they can fix it on their own. Do you think China's economy will rise up again? Or do you think things are too far gone now? Let us know in the comments, and be sure to give this video a thumbs up and subscribe for more.